in the mid trillions of commercial real estate loans that are coming due in the next couple of years. Fact. But the question is, how does it affect the economy? How's it going to affect banks? How's it going to affect real estate? What is happening, amazing DeRosa Insiders community? My name is Matt Faircloth, and this is the Cash Flow Digest Show. Again, my name is Matt. Our company is the DeRosa Group, and we are a real estate company dedicated to transforming lives through real estate. It's what we do. It's why we're here. It's what we stand for. It's what we want to help you do. If you want to learn how to transform lives through real estate investing, we've got programs that can help you get there. Before we get into the meat of the show, guys, I want to talk to you about something going on in today's market. There's been a lot of chatter, a lot of banter, so to speak, about what's going on in the commercial real estate market. And I've commented on this before, and this is a fact, that there's in the mid trillions of commercial real estate loans that are coming due in the next couple of years, right? Fact is what it is, right? But the question is, how does it affect the economy? How's it going to affect banks? How's it going to affect real estate? Other statistics I've seen have talked about what percentage of those commercial loans that are coming due that need to get refinanced are in distress. How many of them are current? How many of them are the properties undervalued, meaning like the debt of the property is well above anyway what the market value of the property would be, meaning like the owner is underwater, so to speak. Well, not all of them, right? We're not talking about like, trillions of dollars of foreclosures coming down the pipeline, but the 1.5, 2 trillion-ish of debt coming due will certainly create some opportunities. But opportunities for who, right? And so there is an article here that I want you guys to check out. It's on Wolf Street, which I've become a fan of recently. And it is about how much of those loans are going to affect small community banks and just banks in general. It might go with your assumption to think, oh yeah, all that debt is owned by banks. But something I've learned as a real estate investor, that most of the time banks treat debt like a hot potato. They bring it in, they'll loan you the money, but they immediately will take that debt and do something called a securitization, where they take a bunch of pieces of debt, like the debt on your rental property and the debt on the rental property from somebody else watching this program and the debt of 35 other people. And they'll put that together and they'll package it up and they sell it as a derivative off to investors. Right? They may continue to service the loan. Servicing the loan means that they're the ones that sends you the bill on a monthly basis. And when you pay your mortgage, you write a check to them, right? And then they take their little cut and then they give the majority of the money off to their investor that's sitting behind them. What's interesting about this article, right? And this article has a phenomenal chart you guys need to check out. I'm not going to show it to you because I want you guys to get on the DeRosa Insiders Facebook feed right now and check out that link that my man Nabiku has posted, right? Yes, a lot of banks do own a lot of that debt. But what is interesting is the majority of that debt, especially the stuff in distress, is owned by investors, right? It's owned by investors. And some of it's owned by you and me as taxpayers, because some of it is Fannie Mae, Freddie Mac debt that are on multifamily, right? Some of it is owned by the American taxpayer. But far and away, the majority of the debt is owned by not individual investors like, somebody just buying some shares of stock, but investors as in like hedge funds, private equity firms, large, big fish investors, family offices. Those folks will own commercial real estate debt, CMBS loans, those kinds of things. Commercial mortgage-backed securities is what that stands for, CMBS. So what's interesting is this tsunami of multifamily deals and office deals and retail investments that are all out there, that are all coming due on their debt in the next couple of years. A lot of those loans are not going to directly affect banks. Infect too. That's a good word too, right? I didn't mean to say it that way, but it's true. Infect banks. And there's folks that have looked at all this debt coming due and said, well, that's going to create another Signature Bank. That's going to create another Republic Bank. That's going to create another bank failure, or like another 30 or 40 bank failures or whatever. I'm not saying it's not going to happen. My crystal ball is broken. I don't know what's going to happen, but I can tell you that the probability is lower than you think that would be, that all this debt coming due is going to then go and trickle down and become a ripple effect and start affecting banks' bottom line. Some banks do own a lot of this debt, but not all of them do, right? And so it's interesting. It will affect by far and away investors who what are they going to do? Well, they'll likely, want to foreclose on the property, take the property back and put it on the open market. So I still hold to my stance that I've said in other presentations here on this podcast, that all this debt coming due, the majority of it's going to get refinanced and it's going to be fine. It's going to be okay. And the investors that own those properties, their returns are going to drop from 18% down to 14%, and they'll have to eat a little bit smaller steak for their steak dinners. Fine. Okay. Not a problem. But there are a few of those properties that are going to get foreclosed on, and a few of those properties might have to get absorbed by the banks, and those banks may have some issues. But far and away, as real estate investors, what you can do is not hope and pray for blood on the streets, mass foreclosures, because I can tell you, I saw that once in 2008, and anybody that hopes for 2008 to happen again was not investing in 2008 like I was. That's the last thing y'all should hope happens, right? So let's not hope that there's blood in the streets and banks going bankrupt left and right and foreclosures all over the place, because that'll jack the market up 3 ways from Tuesday. You don't want that to happen, right? What I hope happens is that there's some spinoff, maybe 10 to 15% of those properties end up going to rework or end up needing to get foreclosed on or something like that. And we can, as savvy investors that have our ear to the ground in very specific markets, can take advantage of those opportunities, right? So what I encourage you guys to do, and I encourage those that are members of our accelerator program, keep your ear to the ground. Be invested in specific markets, not all across the United States. Be invested in a few specific markets, know the brokers, know the sellers, and when a distressed deal like this couple of $1 trillion in debt coming due, well, if that produces a deal or two in the local market that you're in, you'll be the first to know about it. That's the best thing you can do, is to be market centric, keep your ear to the ground, be super connected, and keep your blinders on. That's how you're going to prepare for the changes that are going to be coming down the pipe, but it's probably not going to bankrupt lots of banks like some doomsday predictors are saying. Thank you to Biku for posting this article. Guys, check it out. Love to hear your thoughts. If you guys are watching this segment on YouTube, make sure you guys go to the Facebook page, DeRosa Insider, so you guys can watch this program live like many people are doing right now. You can also hear the rest of this program. Love to hear your comments on YouTube. Love to hear your comments here on this channel or even on Spotify. Okay, guys, that is our section on current events. Hope you guys like that. We'll be commenting on current events each week. If you guys want to hear me comment on a current event going on in the real estate market, why don't you tag me in a post? Make a post on the DeRosa Insiders Facebook page and say, hey, Matt, could you please talk about whatever it is? Insert current event, insert a thing there, and I will gladly discuss it with you.